What's good, YouTube? It's Main Markets back with another video. We haven't been posting in a while. Would like to apologize for that. It's just been busy, man, and we've been looking to actually refine this channel into a proper channel with proper content, and this is just our way to slowly get back into the game and show you guys some analysis videos. So I'm just gonna break down how we traded a particular setup yesterday. It's a continuation of the 4-hour bull trend, right? So looking at this price action, we see that price broke this structure to the upside and went on to break another 4-hour high over there, right? Now, when price breaks a high, we essentially just look for it to pull back, grab some orders, and go to target the the weak higher high to go on to continue that bullish uptrend, right? So, I mean, you might think, why not just buy now, right? It's not wise to do that because we essentially want to buy at a good price. We want to buy when the market is at a point where it's just really just going to run from there, where it's finished pulling back and we don't take any drawdown. We enter at the right price, at the right level, and the market just taps us in and flies, right? So we're looking at this the market right here, right? We have this sort of like 4-hour swing range that we're looking to trade from. Now some of you might say that no, this is not a swing range because this is essentially one swing leg up. And yes, if that's the way that you like to see it and that's how you've tested the market and it works for you, that's fine. But for us, when we see price putting back a minimum of 40 pips on Euro USD on the 4-hour chart, we will mark a certain high or low as swing structure, and when price progresses on to close above that point, we mark it as a break of structure, right? Simple enough. So we're looking to trade this range over here, and essentially we want to see, yeah, as I said, price coming to pull back and go on to break structure where our take profit would be above that high, right? So let's see how price plays on. But before that, I'll just look to mark on my zones that I want price to get into. We have this demand zone over here where price recently came in, and that demand zone is the one that caused the move to break structure to the upside. So I'm looking to trade from this demand zone over here, right? Now what I want to see is on the M15 time frame. I want to see the M15 sort of like trickle down and hold on. I want to see the M15 trickle down and tap into my zone and start to cause bullish structure shifts to the upside, right? That's my first line of logic to be able to catch this move. I want to see the M15 come into the zone and start to break structure to the upside, right? Whether it's swing structure or minor structure, I don't care. As long as price comes into the zone and starts breaking structure to the upside, then we're gonna look to seriously capitalize on catching this move, right? So let's play price forward and see what it does, right? So we have a little bullish a bearish candle pullback. Let's see if that's 40 pips. Not quite, it's only 27 pips, right? We have another bearish pullback. Let's see, is that 40 pips? No, that's 37, right? I'm very mechanical about this. I want to see price pull back a certain amount before I mark this as a certified high, right? If price moves, pulls back and doesn't reach 40 pips and goes on higher before it does that, I do not mark it as swing structure, right? So price can do this and this and this and this, but until it does a 40 pip pullback, then I'm gonna mark on my pretty circle there, and I'm gonna classify the topmost part of this structure as a swing high, and I'm gonna essentially I'm gonna start targeting this high as my TP, right? So let's see, has price broken, sorry, has price reversed 40 pips? Yes, that's a 50 pip pullback, so I will as a result mark that as my swing high, right? And I will look to target this high, essentially, right? Does that make sense? I hope so. I'm talking to myself here. But yes, this would be the point in which price would break structure. If price closes above this, then I mark this as the swing structure. But yes, also price is also tapped into my 4-hour demand zone over here. So anywhere within this zone, I'm looking for price to reverse and go up to break structure to the upside. But we're gonna see that first on the M15. If the M15 starts to break structural highs, right? So yeah, on the M15 we can see that there are a number of zones. This one over here that looks good, and also this zone over here. Alright, price is tapped into that M15 zone, and anywhere within the 4-hour zone or on these two M15 zones. Let me see, this is also supply that flipped to demand. Anywhere within these three zones, I'm looking for price to essentially reverse. Zones are going to be a topic for another day if you don't really understand how they work. But yeah, anywhere within these three zones, we can expect the M15 to essentially just come in. You can see right now the M15 is sort of like making lower lows and lower highs. So the moment it shifts and starts breaking highs, right, and creating demand zones, is when I'm gonna look to start trading this chart actually. So let's go. Let's see what the M15 is gonna do. Around this time is around 7. I'm not in front of the charts yet at this point. I usually get to the charts at around 8 and look to start my analysis for the day. So at this point, the price action is irrelevant to me, and yeah, we'll see what happens from 8 o'clock. Alright, that's 7:45 candle, and boom, 8 o'clock. At this point, I'm in front of my charts. Alright, we see that the M15 has tapped into M15 demand and has already switched structure to the upside there with an M15 change of character, a bullish change of character in this case. So I'm just gonna move that out of the way and let's see what price does, right? Alright, so the M15 is broken structure to the upside, and when it breaks structure, it sort of creates a demand zone, right? M15 demand, and when the M15 creates a demand zone, I am gonna look to enter on the 1 minute time frame only if the 1 minute is gonna come into my zone and also starts breaking structure to the upside, creating a 1 minute demand zone, is where I'm gonna put in my limit order to buy the market, and we're gonna go on to target that high, right? Now at this point you might be asking yourself, why don't you just set your limit order and right here? And you can do that, but we like to just come in with a very small stop loss and to sort of like increase our risk to reward ratio, right? So jumping on the M1, let's see if price is gonna respect our M15 zone, right? At this moment, I'm still not in front of the chart. Sorry, I am in front of the chart, but then I'm not really watching what price action is doing until price action taps into this brown zone over here, right? Because that's where I'm going to look to enter my limit order. But at this point, I want price to give me confirmations that that zone is going to hold, because what usually happens is that on the first zone, price usually just disrespects it. It'll look like it wants to switch trend, but then it doesn't always do that. So I'm gonna go on the M1 to see if the M1 is gonna give me sort of like that confirmation by coming in, tapping into the zone, and just switching structure to the upside. Right? Cool. So we tap into the zone, and at this point we want to see if the M1 is going to start. It's going to continue sort of like this bullish momentum, but then it doesn't. It doesn't continue the bullish momentum. The moment price breaks below that zone, it means that the zone has failed, and we are going to have a continuation of the M15 bearish trend that's going to facilitate the 4-hour pullback, right? It's not a train smash. We're going to jump back on the M15, and we're going to look for the M15 to sort of like, let me just delete that. We're going to look for the M15. The M15 is back into the 4-hour zone, so anywhere within this zone, the M15 can still make that bullish change to the upside, right? And yeah, that's what we're going to look for. We're not interested in the bearish momentum at the moment because we are in a 4-hour demand zone. Trying to sell this market, although we expect price to come down to any one of these zones, trying to sell the market at this point is really just low probability, because at any moment price, even the next candle, can come and break this high, creating another demand zone. We tap into the zone, and then we go and target that high, the 4-hour high, right? So selling at this point is low probability. Right, we're only looking to catch longs at the moment, but we're gonna wait for the M15 to give us the necessary confirmation. So we tap into the next zone, the next M15 zone, refined within the 4-hour, and let's see what price does. Right, we're starting to see that bullish pressure come in. Alright, good. We've broken another high. Right. We've broken this high over here, right? I'm just gonna get this out of the way. Now let's try to build the story, right? Price has broken structure on this 4-hour leg, and the origin of the move is down here. We see that supply has failed over here, which flipped to demand, and price has mitigated that demand, nested within the 4-hour demand, and now price has sort of like, price has made that bullish structure change to the upside, and we are going to look to capitalize on the pullback, right? When M15 breaks structure, we try to look for the last point of demand that caused the break of structure. So now we've created a M15 demand zone, and let's see what else did M15 do. There's this supply zone over here. I'm doing all of this essentially to just see, to sort of like build more confluences to see that can this zone hold or not, right? So yeah, price came into supply, and 1 second, supply has failed. from this point over here. What does that mean? Alright, we saw the M15 come down and break the lows, right? Now, every time it pulls back, breaks another low, it creates a supply zone, which is this candle over here, right? Now, we expect, according to overflow, to according to order flow, we expect price to come into the supply zone, grab some orders, and go down to create a lower low. But price didn't do that in this case. It came in, it reacted, and price went on to defeat that supply and cause a structure break to the upside, right? So this just tells us that this M15 zone is holding a lot more water than the one that failed previously, this one, right? We essentially didn't have this many confluences as we do here, you know, and we're also mitigating the equilibrium of that 4-hour zone. So it's just telling us that, hey man, this is a pretty good level to look at. Now, back when the 4 hours up here, if you would have bought, you would have sort of like be in this overall drawdown. You'd be in the red at the moment, waiting for price to come back and sort of like into your entry point, and you could look to start making more profits from there. However, yeah, we have an M15 zone now, but we want to see at this point, we want to see price come back into the zone on the M1, tap into the zone, and we want to see the M1 start to make those structure shifts to the upside. Once the M1 does that, is when we're gonna look to start buying into this market, because we've literally just dived in deeper into the different time frames, and every time we dive to a lower time frame, we essentially have the ability to come in to this market with a much smaller stop loss, right? But you'll understand as I go further into this price action. So until price comes into this M15 zone over here, we do nothing, right? You do not want to buy straight away, because you know, like, the market is poorly priced. Let's see, not exactly poorly priced, but yes, you may just take on the zone and say, I'm gonna put my stop behind this zone, try to target this 4-hour high over here with a 1 to 3. Does that work? Yeah, it's about a 1 to 3. The risk to reward ratio of 1 to 3, and by all means it's fair and all of that, but why take a 1 to 3 if you can have a 1 to 10 or a 1 to 15 or 1 to 20? You know, if we come into this market risking 1%, you're gonna make a 3% profit by the time the market reaches that high. Whereas if I'm diving into a lower and lower and lower time frame, I could come in with a much smaller stop loss, you know, and make 10% in one trade, like literally within a few minutes to a few hours, right? So have the patience, sit on your hands, and wait for the M1 to come into this zone and start to give you those structural confirmations, right? So let's go. Let's see what the market is going to do. Boom. The market is coming to the zone, so we're going to dive onto the M1 and try to wait for those structural shifts to the upside, right? So essentially, the market is going to come into my zone around this point over here, right? In which now I'm going to, just 1 second. Oh, by the way, if you feel like what I'm saying is very complicated, I'll try to simplify it for you with a diagram at the end of the trading video, right? Price taps into my M15 zone, and when price does that, I want to sort of like read the story of price action. You know, you don't just want to look at what's going on right now. You also want to look at what happened in the past. You don't have to go all the way and try to make sense of all the structure. Just try to see what the previous structure has been doing, and you could essentially try to get an early entry within the M15 zone, nested within the 4-hour zone, right? Cool. So let's see. Price was coming down over here. Okay, price is going up. It had a structure change, came down, changed structure again. So okay, what do we see? Price comes down and breaks that structure. Cool. So we have an M1 break of structure. The reason why I'm doing this is to try and see if I cannot get an M1 zone in advance while price is still in my M15 zone, right? So let's see. Alright, price came in there and it had this demand zone that got mitigated. Alright, it got mitigated and we had another double break of structure. This would be me essentially just talking to myself within the live market, trying to make sense of all the price action. So we also have a failed reaction because when price pulled back from the supply, it gave us this failed reaction. I'll explain all of this in just a moment, but I just wanna see. Okay, so the last point of demand would be this candle over here. Alright, cool. So within this M15 zone that we're looking to trade, let's forget that for now. Within this M15 zone that we're looking to trade, we can see one thing, right? Price is coming to the zone. I'm looking to enter the zone. I'm looking to enter the market at this point, right? Because we are on the M1 and we've already refined. At this point, I'm looking for a trade. I'm no longer just analyzing price. Ideally, anywhere within this M15 zone, I want to see the M1 start to make any structural shifts to the upside, right? Ideally within this M1 zone. But because this M1 zone has so much confluence behind it, in the sense that price came up and broke this high, right? Price pulled back, creating a supply zone, and price comes into that supply zone. Instead of making a lower low, right? Instead of making a lower low, it reacts from the zone, goes on to close above the zone, making the zone fail, right? Causing this failed reaction, causing this double break of structure from this one, going on to make an M15 zone fail, going on to make an M15 change of character. This demand has a lot of weight behind it. So much so that instead of waiting for price to come in and making structural shifts, I'm going to look to try and enter a bullish position from this zone over here and trying to see if I can come in and trade from the zone, because it has all the confluence around it. Now if this zone fails, because there's another zone down here below that is essentially still valid, in the sense that how can I put this, we have liquidity before it. We have liquidity before the zone, in which the market can come in, sort of like react from the zone. If it stops me out, this would be the last point that I'm looking for the market to come in, break structure to the upside, and I would enter here again after taking this loss and try to target that high still. I don't mind taking one loss for another. It's just that this zone for me, it just looks really good because it has all these confluences stacked up behind it. So we're gonna see what price is gonna do, and yeah, it's in the market's hands now. So let's go see what happens. Right. We're gonna look to take this is a high I would want to see go for the M1 to sort of like validate my bullish bias. But we go, I think we've tapped myself into that trade. Let's see. Yes, we're already tapped into the trade, but I just also want to give you that mini lesson of how I'd want to trade the M1 going forward. We're coming down. Alright, price has made a new low, and this is the high that I'd want to see go. I'm still in a trade, but I'm in the negative right now. Let's see, I have a 3 pip stop and my take profit. Hold on, I have a 3 pip stop, so at first I'd want to take a 1 to 4 risk to reward, right? At 1 to 4 I would basically take away 25% of my position so that my risk would be off the table. Some people would want to move the stop loss to break even, but because at this point within price, we're trading the M1, price can easily go away, come back to retest our entry, spike us out of the trade and go, right? So it's best to essentially just partial some of your position out of the trade and keep your stop loss in the same place, right? So I'd be looking for a 1 to 4 just to sort of like partial my profits out of the trade. But anyway, we're also looking to see what that M1 setup, we'll want to see if this M1 setup is gonna hold, right? So we're coming in, I'm not stopped out yet. We're coming in and we have our first M1 change of character. The M1 bullish change of character. Price is broken structure to the upside, and let's see. Just get this out of the way. All right, on the M1, I basically like just to take the whole range of price. I do not refine to the candles like I do here. I essentially just like to enter on the whole range, right? So we have that zone and this zone, and I've seen everything that I need to see at this point. Let's just assume that I'm not in this trade yet, right? I've seen everything I need to see. I set a limit order at the very edge of the zone, put my stop loss behind the zone, and I'm not tagged into the market at this point. Hold on. Yeah, I'm not tagged into the market yet. Price has wicked the high, so we're gonna see if price is gonna tag me in, right? My limit order is there. You can also enter a market order, but I just preferred the limit order. So okay, the next candle, price tests me in, and yeah, price is chopping around at this point. I'm gonna set another 1 to 4 just to take away some of my risk over there, right? Let's see what happens. So at this point, this trade, it's already reached 1 to 4, and I'm gonna take away some of my risk, 25% of my risk, so that if price comes back down, let's say for instance I have a stop loss which is going to a stop loss of $10, for instance. if price comes back down and hits my stop loss, um, because I would have closed $10 from my position, um, it means that the trade sort of like breaks even and I don't exactly make a loss. I hope that makes sense. Otherwise, I'll explain partially out a trade in another video. But essentially, it's the very same as moving your stop loss to break even. I basically just take the same amount of money that was on risk from the trade, and yeah, it wouldn't result in an actual loss. So at this point, right, we're looking to target the 4-hour high, right? We're gonna target the 4-hour high. Oh, by the way, in the live market, I wouldn't take two trades like this. I'd at least wait for um, my initial risk to be off the table before I go on trying to target. Oh, yeah, before I look to scale in. But anyway, so let's see. Just gonna. We're in two trades at the moment. I took one yesterday, but yeah, essentially this is two trades that you could have taken, and we're gonna look just to play price forward to see if we're gonna get stopped out or to see if we're gonna hit our eventual take profit. So let's go. At this point, I'm just sitting on my hands and letting price do its thing. It takes a while, you know. And yeah, there we go. We hit our take profit. We hit our take profit, guys. Beautiful trade. Beautiful, beautiful, beautiful. In the space of a couple of hours, by constantly refining and refining and refining and following a systematic approach, you could have gotten, what's that, a 1 to 9 trade and a 1 to 18 risk to reward. Isn't that a lot better than the 1 to 3 trade that we could have taken on the M15? It's much better. I mean, you could literally pass a prop firm challenge in one trade if you know and understand how to trade SMC like this. So yeah, that is the thought process around the trade. Unfortunately, because we trade so many time frames, there's no way to make this any quicker. It takes all this knowledge about market structure, supply and demand, flip zones, liquidity, entries, and trade management to systematically dive into the market like this and be able to trade like this. So yeah, main markets, smart money concept traders. This is how we entered the market yesterday, and yeah, these are the results we got. Let me just hide that other entry right there, because we actually didn't take a double entry. We took one entry, and yeah, this is the result. We took a 1 to 18 yesterday. So yeah, just to simplify things for you a little bit, I'm just going to show you our approach to trading this market. So if you look here, alright, this is our pretty little diagram to simplify the trading, right? So in the event that we have the 4-hour making a higher high like that, right? The first thing that we do, we'd mark out the 4-hour swing range, and then we try to get our 4-hour zone in which we'd look to trade, and then from that point we would monitor the M15 and watch the M15 coming down, and tapping into that 4-hour zone, right? Cool, all is good and well. In some cases we are able to sort of like trade the M15 down to the 4-hour zone, just taking those cells all the way down to our zone, and once price switches into our zone and gives us that first structural change to the upside, we change our bias right now, and our bias becomes bullish, and we look to trade M15 demand zones, and we essentially wait for the M1 to come down in, and we look to trade the market a lot higher, right? So on your right here is our like checklists to see how we would look to enter into the trade, but there's a lot more that is not in here, like our mapping process. It's just in another file at the moment. However, from here we have POI selection. How do we go on to choose the zones that are high probability? As you saw earlier on in the video, I don't just take any zone that I see. I take the zones that have the highest probability, and those probabilities stem from a zone being visible on the M15 or higher. It has to be an engulfed sell to buy to sell, candle, or fractal. I'm not going to get into all of this right now. It's just all the different confluences that we use to pick a zone, and we have a lower time frame execution model, how we want to see the lower time frames building up, and then we have trade management, 25% partial at 4R, where we'll look to just partial out our position at a certain point, and like pro trend and counter trend targets, and of that. This would be overkill at the moment for one video, but essentially, just to recap, we had our 4-hour range, and we waited for the M15 to come into tap into our 4-hour demand, right? We waited for the M15 to switch bullish. Remember earlier on, the first zone didn't work out, right? We went a little bit deeper, right? The M15, just 1 second. The M15 essentially came in, switched bullish, and that first M15 trend change didn't work out, and we ended up taking the second one. See, we ended up taking the second one a little bit deeper into our zone, and once the M15 switches bearish, once the M15 switches bullish like this, right, like what you're seeing here, this white line would be the 4-hour, the green line would be the M15, and this orange line would be the M1, right? Once you see the M15 take structure to the upside, it'll essentially create a zone which we look to trade from based on a certain number of confluences, and we'll wait for the M1 to come in and pretty much do the same thing that the M15 did, tap into the zone and start breaking structures to the upside, and then we look to enter on that M1 zone, and we target the 4-hour high, right? And that's how we do it, plain and simply. If you are sort of like trading one time frame, your entry would look something like this. You probably like get a 1 to 3, or maybe a 1 to 1, 1 to 2, and that's not what we want as SMC traders. We want to refine and refine and refine. If you trade 2 time frames, let's say maybe you trade the 4 and the M15, you'd get maybe something like that. Maybe a 1 to 5 or up to 1 to 10, depending on the swing range. But if you just can persist and keep on refining and going down to the 1 minute, you can get away with a 2, 3 or 4 pip stop loss. I wouldn't recommend going lower than that, And yeah, and like the difference is literally night and day, you know. Let me just try and repeat that. I just want you to see uh, the difference. Trading one setup, you know. So your stop loss would be behind your zone, right? This is, let's assume this is a 123. Let's assume this is a 125, 126. This could easily be a 1 to 10, 1 to 15, 1 to 20. You know, easily. You know, here you make uh, if you risk 1%, here you make 3%, right? Here you make 5%, and here you make a whopping 10 to 15%. One setup, guys. I'm not saying that this is easy, but just keep on refining and refining and refining, trading the lower time frames, and you could easily get a high risk rewards. You know, when I take a loss, it's nothing, because one win makes up a whole string of losses, you know. So yeah, I mean, that's how we approach the markets. There are a number of trade scenarios here where we just look to trade different setups. If you're looking at different things, like, okay, what to do if the M15 is still coming down, what to do if the M15 is still coming down, you know, like what actions to take, what you want to see, all the systematic approaches. What if you want to trade the 4-hour counter trend, you know, things like that. What if you what if you get into a supply zone and you want to trade the counter trend pullback into the demand and go on to break structure? Yeah, man, this is stuff that we are building on right now. It's essentially the reason why we haven't made any video content. Is we just wanted to make an approach to trading the market that is going to be simple and mechanical, that everyone can sort of like follow along, and yeah, and trade. And little by little, we're going to release this content. It's just that creating the content too takes time, guys. It's really not easy work to make something as complicated as SMC simple. But yeah, these diagrams would simplify everything, and one by one, when we create the video content, we're going to show you how to approach the market the same way we do and get some of the risk to reward ratios that we do. But yeah, this is upcoming content. I was just giving you a simplified version. Which one? It was Pro 4-hour, Pro M15 that I was trading. Here it is. See? Yeah, just a quick summary again. 4 hours bullish. 4 hours bullish. And we were looking for the M15 to come into the 4-hour zone. And once the M15 came into the zone, we waited for structure to shift upwards to confirm the 4-hour low. Once the 4-hour low is confirmed, we look to confirm the M15 zone, right? By the M1 coming in, switching bullish, confirming the M15, and we'll pull the trigger on the M1, target the 4-hour. Simple stuff. Just that you have to learn it one by one, and I've gone on a rant. Jeez. But anyway, we'll see you when we see you guys. We're still alive. We're still out there. We're just trying to create content that is gonna be easy digestible and whatnot. Because what's the point of seeing me do all these trade recaps and trade analysis if you don't know how to do it yourself? So yeah, we're gonna look to educate and try to make a difference in the Forex industry with such content. So until next time, guys, peace out.